Welcome to another episode of Follow the Money. My name is Joshua Belanger, and I have a $4 million trade that you're going to be interested in and probably something that you can ride along with as well. So let's take a look here at JD.com. Now, there has recently been a corporate shakeup. Those that are not familiar, this is a Chinese e-commerce play. It's like the Amazon of China, but it hasn't been trading like Amazon. It's behind, and it's actually trading at $78, not $7,000 per share like Amazon. But JD.com is where we're following the money today. Take a look here, is at $86, pulled back. And for those pattern traders, they like to see this. They call this a rounded bottom, round bottom. So we got a rounded bottom, and it's looking to be possibly retesting highs. And not only that, when you look at the technical, we actually see money, big money piling into this. And let's take a look at that. So what we see here, and every time we talk about following the money, we always want to know where the money has been, where it's going. And money was in the November contract here. So the 80 strike here, we have an open interest of 28,000 and 14,000 traded today. And what we're seeing in this activity on JD is that they were actually closing out those November contracts, and they were rolling them forward. And they're only rolling forward because they're wanting more time and they think more upside is to happen here. So they're rolling that position, and they rolled it into the 80 call here. So if we take a look here at the time it sales, the top trade here was 7,000 contracts. That's 7,000 contracts, just like that. So they rolled it from the November into the December. And the initial 7,000 was at $5.70 there. So that's about a $4.1 million purchase right there, rolling it, but 4.1 just purchasing those 80 calls. That's a significant amount of money. And you can see here 21,000 contracts traded in total. I don't think all 21,000 of these contracts are going to add to the or stick to the open interest here, but we will see the open interest increase, which is meaningful because that has indicated, and we could see on the transactions, that there were opening buyers. So what that means is over the next 71 days, someone with some deep pockets is looking for prices to go to $80 or higher. And right now it's at $78. The key thing here, though, is that there is an earnings event that's going to happen in November. I don't have it on the chart here, but we could look at the expirations here, and we can kind of get an idea here where it's at. I think it's in this November 20 time frame. You could look at the implied. So it's possibly in the second or third week of November. It's coming up here. So either or, you got to be mindful of that. What we'll see is typically implied volatility tick up higher. You don't really want to hold options through that expiration. But one thing that you could look to do if you're looking for this, if you're going to hold through earnings, is to use some kind of spread. We've talked about spreads before. You could look at something as like the 75-85 spread, or an 80-85 spread, or even go 70, maybe 70-90. So, about $10 in and then $10 out. Those are options there. Those are options on how to play it. Again, this is where money's going. This is where money's looking for, how you want to position it, how much risk you want. That's the beautiful thing about options, and that's the wonderful thing about how to use options to define your risk or to define exactly how much you want to make. So that's what we have for today. We'll see you in the next video.